Hello everyone, this video is all about FUTA taxes. We will learn who pays the FUTA tax, how it's calculated, when are the deposits due, and where is it reported. So let's get started. If you have employees, you must pay unemployment taxes to give employees unemployment benefits. It's one of the several employment taxes all employers must pay. Unemployment taxes are paid by employers to the federal government and the states in order to fund unemployment benefits for out-of-work employees. The unemployment benefits are administered by Department of Labor, and the FUTA tax paid by employers are administered by IRS. So who must pay the FUTA tax? The employer is entitled to pay unemployment tax if the employer paid wages of $1,500 or more to employees in any calendar quarter or the year, or the employer had one or more employees for at least some part of the day in 20 or more different weeks during the year. So the FUTA taxes are only paid by the employer. The actual FUTA tax rate is 6%, but the employer gets tentative credit. Maximum amount is 5.4%. The effective FUTA tax rate that the employers assume for the first 3 quarters is 0.6%, which is 6% minus 5.4% gives you 6%. So the effective tax rate is 0.6%. This is what the employer pays if he gets full credit. The IRS published the actual FUTA tax credit and the credit reduction in November, and the fourth quarter tax liability is calculated based on that. The FUTA taxable wage base is $7,000 per employee per year. Now, there are some payments that are made by the employer which are exempt from FUTA tax. They are like fringe benefits such as meals, lodging, contribution to the employee's health plan by the employer, any reimbursements of the qualified moving expenses, that is only for the military, then any group term life insurance benefits paid by the employer, any money that is earned by the employee after the employee has died, employer contributions to employee retirement plan. All these are the payments that are exempt from FUTA tax. Then any organization that is exempt from income tax under the section 501c3 of the IRC is also exempt from FUTA tax. And one example is non-profit organization. Now let's see how we calculate the FUTA tax. So the first thing is you count all the employees, which are your full-time, part-time, and temporary workers. You don't count the partners in the partnership, and you don't count wages paid to independent contractors or any other non-employees. You must pay federal unemployment tax based on the employee's wages or salaries. The FUTA tax rate is 6%, okay, and it is calculated on the first $7,000 of income paid to each employee. Most employers receive a maximum credit of up to 5.4% against this FUTA tax for allowable state unemployment taxes. So consequently, the employer ends up paying only 0.6% of the FUTA tax. Let's review the steps again. First, begin with the FUTA taxable wages for the pay period, that is your gross wages of the employees, plus any fringe benefits paid, including wages, salaries, commissions, fees, bonus, vacation allowances, sick pay, and the value of goods, lodging, food, and any other non-cash benefits, and the employer contributions to the employee's retirement plans and other specific payments. From this amount, deduct all the payments that are exempt from FUTA tax, and also the amount for each employee that is over $7,000 for the year. Then subtract the amount of tax credit you qualify for from the FUTA tax rate. For instance, if you qualify for the maximum tax credit of 5.4%, then your effective FUTA tax rate will be 0.6%. Then take the total amount up to $7,000 for all employees and multiply it by 0.6% to get the amount of unemployment tax that is due. Now let's look at each quarter and when are the deposits due. For the first quarter, that is between January and March, the deposit is due by April 30th. For second quarter, which is April to June, the deposit is due by July 1. And for the third quarter, July to September, the deposit is due by October 31. The last quarter, October to December, the deposit is due by January 31. Small amounts of less than $500 in each quarter are carried over to the next quarter and are paid only when the total balance due is more than $500. Deposits must be made by electronic funds transfer. Let's look at one example. Let's say that the FUTA tax liability in quarter 1 is $380. Now this deposit is not due by April 30th because the amount is less than $500. It will be carried over to the next quarter. Now if in quarter 2 the tax liability is $250, we add up the first quarter and the second quarter and the total amount is $630. This is due by July 31. Now in the third quarter, let's say the liability is $210. This deposit is not due by October 31. It will be carried over to the fourth quarter. So the final quarter liability. At the end of the year, the employers file Form 940. 940 is used to report the annual federal unemployment tax. If the total balance due is more than $500, full amount must be deposited by January 31. Automatic extension up to February 10 is given if all deposits were made on time. If the amount due for the fourth quarter is less than $500, then the payment can be attached to 940 and paid with the form's due date. Let's talk about the FUTA tax credits. The FUTA tax rate is subject to state tax credits. Employers' FUTA tax rate might be lower because there are state credits that can be applied. Generally, the employer can take a credit against your FUTA tax for amounts he paid in state unemployment funds. Credits may be as much as 5.4% of the FUTA taxable wages. If the employer is entitled to maximum 5.4% credit, then the FUTA tax rate after the credit is only 0.6%. FUTA liability and two types of credit for paying the state unemployment insurance. So the normal credit is 90% credit, which is 90% of 6% FUTA tax rate, which is equal to 5.4%. This is the tentative credit that the employer assumes for the first 3 quarters and make the payments based on 0.6%. Then there is additional credit. It is for the employers who have the state unemployment rate that is less than 5.4%, and they get additional credit. Can this tax credit be reduced? The employer is entitled to maximum credit if he paid state unemployment taxes in full, on time, and on all the same wages as are subject to FUTA tax. The IRS has an unemployment tax trust fund to pay the cost of administering the federal and state unemployment taxes. Generally, the employer gets a credit for amounts he pays to the state unemployment fund. Some states borrow from this trust fund and some of those states don't repay the loans. If the state doesn't repay within 2 years, then the employers in those states may be required to pay additional unemployment taxes. If your state has not paid the full amount it owes to the federal FUTA fund, then the employer's credit may. Let's look at some examples. Example 1. BB Corp has FUTA taxable wages of $90,000 in first quarter. Calculate the FUTA tax and when should BB Corp deposit the tax. So we are given the FUTA taxable wages of $90,000 for the first quarter. And the employer assumes that he's going to get full credit, so he will multiply 90,000 by 0.6% instead of multiplying it by 6%. So when we multiply that, we get $540. So the FUTA tax must be deposited by April 30 because it is more than $500. Now let's look at example 2. BB Corp has FUTA taxable wages of $40,000 in first quarter, $30,000 in second quarter, and again $30,000 in third quarter. Calculate the FUTA tax for each quarter and when should BB Corp deposit these taxes. So first quarter FUTA taxable wages are $40,000. We multiply that by 0.6. It gives us $240. This amount is less than $500, so it should be carried over to the second quarter. Now, in the second quarter again, the taxable wages are $30,000 and we multiply it by 0.6%, we get $180. We add $180 to the first quarter liability of $240 and we get $420. It is still less than $500, so the whole amount is carried over to the third quarter. Now let's calculate the third quarter. Third quarter again, the FUTA taxable wages is $30,000 times 0.6 gives us $180. So 240 plus 180 plus 180 is $600, and now the amount is due by October 21 because the amount is greater than $500. Let's look at one more example. BB Corp has FUTA taxable wages of $90,000 in first quarter, $30,000 in second quarter, and $30,000 in third quarter. Calculate FUTA tax for each quarter and when should BB Corp deposit the tax. So the first quarter has 90,000 FUTA taxable wages. We multiply that by 0.6. We get 540. The amount is greater than $500, so it has to be deposited by the due date of April 30th. Second quarter is 30,000. We multiply that by 0.6 and we get 180. It is less than $500, so we will carry over to the third quarter. And third quarter again, it's 180. The amount is still less than $500, so it will be carried over to the fourth quarter. In the next example, we are given the number of employees with their salaries for the first quarter. So there are 6 employees and they have salaries of total of $35,000, but we need to know how much of this $35,000 is actually taxable for FUTA. We know that the FUTA tax base is $7,000, so up to $7,000 each employee's salaries should be calculated for FUTA. So we whoever got more than $7,000, we will only take 7,000 for that, and we will add that. So number 3 and 4 of the employees have 8,000, but we will only take 7,000 for those employees. We calculate the total, it comes up to 33,000, and 33,000 times 0.6%, which is also 0.006, gives us 198. That's the FUTA tax liability for quarter 1, but it will not be deposited in quarter 1. It will be carried over to the next quarter. In the next 2 slides, you will see the penalties for FUTA non-compliance. These are also tested on the exams. You will see 2 or 3 questions related to that, so please go over it. And if you have anything that you want me to cover in these videos, please let me know in the comment section. I will keep posting more videos, and I wish you all the best for your exam. I'll see you in the next one. Till then, keep learning.